Alright, imbalance. We're aiming for that as a premium array. Going along in the balanced price range, targeting buy side liquidity. I suspect it'll go up into that SIB up here. I just noted in blue, but just for a simple fact that I don't have much time in front of the charts today, we'll just aim for this for a simple bread and butter trade. One contract just to respect the risk, and if I get another entry, it'll just be another singular. So there is something of a volume imbalance there right now. If we trade down, I'll buy it once more right in here. That'll work. Okay, so that was a volume imbalance entry as well. Pyramiding, just one singular contract, and we're going to let the rest roll on into hopefully the buy side liquidity. Okay, roll stops up just below the swing low prior to my first entry, and I'm referring to a second chart when I said swing low, so in case you're wondering, where's the swing low? So I'm watching how we run through this. I want to see a lot of candle on the upside, big beefy body. If we drop down that little blue shaded area, I'll buy one more. That'll be the final one. Here I'm just measuring the order flow. I want to see it support that, not go down into it now. Why? Because we took out the swing high just past the 12:55 time window, so it should accelerate into the buy side liquidity here. Stops rolled. No partials, it's too small of a position to consider it, so it's there. Alright, so we're going to short this here inside the breaker. It's the down close candle prior to that higher high. Trade was. Alright, so I gave you a 1 hour fair value gap this morning. I told you that was my interest, where I felt the algorithm would draw to today. And a lot of you were looking at the rally today ahead of FOMC, probably thinking, good old ICT got it wrong. No, you just have to wait for the delayed gratification. Here is the breaker again. So it should repel here, go down into that 38.30 and lower. I like the idea of 38.10, maybe 38.05. So think about what we've seen today. Everybody is wanting to be a part of this big move that's in a retail capacity. They want big movement, kind of like the non-farm payroll carnival. They priced in a Judas swing, in my opinion. It's too overdone, and sell side will have to pay its toll. So here we have price just meandering around between the midpoint, just below the midpoint of the low formed in the lunch hour up to the high at FOMC 2 o'clock. And this is the second stage of the move. It's always a two-part FOMC event, usually a Judas swing, then the real move. And down into our fair value gap. Beautiful, beautiful execution, beautiful delivery. All right, close my profits. All right, short little ditty here. I'm going to go long here on this fair value gap, but stop here for right now while I manage to determine where I'm going to take profits. Every time I start talking and doing a recording, there's the imbalance there. It's a SIBI. We're going to use that area there because that is the only exposed area for sell side offered, only imbalanced. The inefficiency is on the buy side, so price will gravitate up into that towards the 3,800. I'm not certain that the 3,800 is going to be actually hit, but we'll work with this. Adjust the stop, and buy side liquidity is here, so we'll take first partial there. And since it's Friday, not from payroll Friday, I'll take majority of it out there. But this is the SIBI draw on liquidity. That's where I'm drawing your attention to. That's where I'm aiming for my trade. And the low-hanging fruit exit point would be at the bottom or low of that SIBI that's shaded in pink. So we're going to be watching price. I'm going to move the stop out just a little bit because it should not come back down into that. It's already shown a willingness to want to go higher. To go back lower into that fair value gap now would be low probability. So I'm going to extend that out a little bit because I'm going to take some partials above this. There you go. There's 4 contracts off of the 6, remaining 2 contracts. I will close as we enter into that SIBI. Short little bread and butter trade. And for disclosure, it is demo. Okay, partial there and final portions there as well. So let's go and show you that this is the same account. I'm not doing something with another account. So there's the entries. And if you remember the last trades I shared with you, no other executions here until we get over here. And let me take and toggle them on and off. So you can see there they are. There they are. No other trades. And now we're here. Must be luck. All right, so the challenge is to do this under 2 minutes and 20 seconds. Good look, ICT. All right, so we have the market trading up into a volume imbalance. Hit that. We have a shift in market structure here, and this is a daily chart. Okay, so we have a SIBI, sell side imbalance, buy side inefficiency. In other words, the market has displaced to the downside. inefficiency on buy side. So that means it's going to want to go back up into that and reprice. That's not rebalancing. Reprice back to this price point there. So all of this has been redelivered on the buy side. Now the market moved lower. This level here is the low of this SIBI, and this is the high of the SIBI. Now, once we left this high to that low is a balanced price range. Okay, that's a balanced market, not just simply because we went back up to here. Okay. All right, so we have the open on this candle here, that's this blue line, and we have the low here. So these are key levels. We're going to drop down into the hourly chart. You can see we traded up into that SIBI, repricing to that. Another SIBI here, trade right back up into it here. Consolidation, small little fair value gap there, breaks lower, trades back up into an imbalance, which you'll see when we get into the 15-minute time frame. Attacks the sell side, which is what I was outlining this morning. Relative equal lows here, low, and relative equal lows. That's where I think we're going to go. But let's drop into a 15-minute time frame and continue on with this carnival-like atmosphere. All right, so here is the 15-minute time frame. As you can see, that's the low of that SIBI. As I mentioned, we went below it. Now it acts as a balanced price range. There. It stops it dead in its tracks. Moves lower. Fair value gap here. Breaks lower. Attacking the sell side there. And again, the draw on liquidity is here. Let's talk about this now. Small little fair value gap that's above the fair value gap that's highlighted here on the 15-minute time frame. So if we see that, you always have to be mindful that, remember the rules, it could likely trade up into that one. We use this for the entry, but anticipate it likely trading up into there. So your stop loss has to what? It has to respect that. So using a position size that would not allow for this much movement to trade up into this order block here. That's what I was showing incorrect today. If we drop down into a 5-minute chart, okay, and you can see there is a fair value gap here that I was using to frame my setup, but not referring to that 15-minute time frame, which is parent, and the 5-minute chart is subordinate to the 15. So this area is likely to be traded to. As you can see, it does in fact trade up to it here. Hits it perfectly to the tick and then trades lower. So the entry I used in here after it hit into this fair value gap there, let me show you the execution actually, be beneficial for you. Okay, so it was trading up into that fair value gap. It's not enough to simply have your stop just above here. The 15-minute time frame fair value gap could be revisited. So you have to cycle through top down. You can see the stop loss getting hit here and the fill here. Okay, so the high on this candle, 38.16 3/4, and the fill, 38.17 1/4. So it's inside that fair value gap. You can see why I've been preoccupied painting. Messy.
a kid, I thought I'd save the world. Running round and chasing all the criminals. Swinging on a web, flying in the sky. Shooting lasers from my eyes. But now I know it never was my destiny. It's not my place in life, not who I'm meant to be. And I don't need the glory, I don't need the fame. And I don't wanna wear this cape. 'Cause on the inside, I know it won't last. On the inside, I'm an outcast. Well, everybody needs a hero, but I'm not everybody else. I walk alone, yeah, I walk alone, yeah, I walk alone, yeah. You know I tried to be your hero, but I was lying to myself. I walk alone, yeah, I walk alone, yeah, I walk alone, yeah. They build you up and then they gonna tear you down. They love you, then they hate you if you wear a crown. It's not that I don't love to solve a mystery, but life is hard enough with one identity. If silence is the voice of a new generation, then I could live up to all of your expectations. I'd hammer down hard like a iron fist, then disappear like I don't exist. And on the inside, I know it won't last. On the inside, I'm an outcast. Well, everybody needs a hero, but I'm not everybody else. I walk alone, yeah, I walk alone, yeah, I walk alone, yeah. You know I tried to be your hero, but I was lying to myself. I walk alone, yeah, I walk alone, yeah, I walk alone, yeah. Cut deep and I'm still alive. I talk my shit till the day I die. 'Cause, oh baby, I live. Oh baby, I tried. Cut deep and I'm still alive. I talk my shit till the day I die. 'Cause, oh baby, I live. Oh baby, I tried. Don't speak when I talk, man. Godspeed when I walk, man. I'll speak from my chest, man. Bounce back when.
All right, so here's your daily chart of the EM and the S&P. And some of you probably are thinking, how on earth did you know that that was going to go where it went this morning? Well, let me remind you, I'm ICT, and I'm just playing. All right, so we have a SIBI here. From this candle's low, this candle's high, that move right there is a sell side imbalance, buy side inefficiency. It's going to want to see it trade back up into price, rallying into that range. Okay, that's what we were expecting. That's what I was expecting, rather. We also have a little volume imbalance, so we traded down into that after forming it on last week, and then Monday we traded down into it, and today we worked down into it once more and expanded up into that SIBI. So you can see that here. So we have this volume imbalance, trade down into it, and expanded up. So it's just an expansion move and dropping down to the 15-minute time frame. It's a little busy, I know, but just watch the video a few times and you'll be able to orientate yourself. So we had a low here, sell side below that, it dropped down below that. Once price rated through that, everyone else would expect to see that as a breaker. My breaker pattern doesn't need to see it expand through and then come back down in, especially if you're going to be looking for a reversal. So big beefy candle, that's what I'm looking at here, plus this fair value gap there. Okay, extend that through. So I had buy side about sell side inefficiency, reverse of a SIBI. Then we had delivery on the downside. Then we traded through it once more right here. See that? Now, the next time it should, notice the bodies of the candles, it should not trade outside that range if it's good. So that's what I was looking at, why I was confident that trading on the 5-minute fair value gap, which you'll see in a moment, was a good run for buy side here and reaching up into that SIBI. This is the high of the SIBI, and this is the low, and midpoint of that, which is consequent encroachment. And I'll show you that it's this day here, Tuesday, September 13th, 2022 at 8:45 on your 50-minute candle. You'll see there's your SIBI there, and splitting that in half. And the 5-minute chart here, you can see balanced price range. We traded down. I wasn't worried about this because all the breaker and balanced price range and expansion to the upside into this SIBI here. And you can see my entries here. So inside of the fair value gap, I waited for it to trade down and right back up into it. All right, so technically it really wasn't my last trade earlier in the week. I was working with the longer term swing trade. This is an hourly chart. And I'm going to show you the model for this time frame. Swing low, broken after buy side taken. Fair value gap, trades back up into it again here. We have a breaker. And another breaker here. But I'm going to use about halfway of that because it shouldn't go beyond that point there. And then we have the buy side imbalance, sell side inefficiency with sell side liquidity there. Okay. And the magic that destroys every little 4K Tinker Toy wannabe algo. There you go. 19,000. Catch up, baby. All right, so you're going to hear all the ambiance. I got permission to do one more since it's technically my last day. I'm selling short the consequent encroachment of that fair value gap. Right in here. That's the midpoint. Went short there. just below it actually, and doing some extensions for targeting. So I'm going to try to take some off underneath that, but it won't be a full position. I'm going to try to pyramid like I just did here. Okay, and nice extension there. Okay, repricing back up into that SIBI. I'll be selling short again, pyramiding. And bring the stop down below the consequent encroachment level. Should not come back up to that level. The premise is that we went up into the fair value gap, rebalanced. After moving up and down through it, it should not come back through that consequent encroachment. The partial taken here. So I've had two pyramidings and another partial here. Lowering the stop down, should not come back into that area. I'll look to take one more. Now, there's a small little fair value gap, tongue twister, fair value gap that I'm watching right in here. And I'll draw your attention to it in a moment. But you should see it there. It's just trading around in it. So this is like the last chance for it to drop. I don't want to see it go back up above that. If it does, it needs to stop. Now, sorry about that. Lowering the stop. It should not come back up into that. I'm going to take a partial on the extension and then change my mind and then close it. I like where I'm at with the low. Here's all my executions, partials, and pyramiding. All right, so when you're looking at the market, I want you to think about things like this. Like if you see a straight line and then something like this. Okay. Classically, we've always seen things like a wedge pattern or something like that. And the reason why those patterns are generally profitable if they're in line with the underlying narrative is that there's liquidity resting above there. Whereas each time it goes down and repels away from those lows, that in itself sets the tone for the likelihood of a run outside of the smooth, clean levels. So think about it like when you were a child and you colored. Okay, you always worked real close to the edges. Okay, and when you get close to straight lines, the market doesn't like to do this straight line stuff. It likes to color outside the lines. And that is in essence how the algorithm seeks liquidity above straight line pseudo resistance. So buy side liquidity is likely to get taken next. Three more of that. The stop will stay the same. Now we're in an order block back inside the volume imbalance. So we'll see 39.70 and a half be taken. And I got a limit order at 39.70 even, so that'll be a nice little bread and butter setup. The stop is below those lows there, obviously you can see. It shouldn't trade down into that low because we have the order block that is seen. Let's see if I can. Right there. That down close candle. We traded down into that with the fair value gap. So that order block is the one that's valid. You'll see it expand to the upside, taking out 39.70 and a half. Hopefully spreading to 39.71, taking the limit order for another example of complete randomness. I'm moving still, getting some things done. And it just fell short of running out my cell net, so I'm just going to close it here.